Okay, this is part 2 of the weekend update, and this video we're going to go over a few trading opportunities that look poised for moves higher in the market. And so let's just jump right in, starting with the 10-year Treasury note. And I've been talking about this. I covered this this was a Monday, this big gap down on the Treasury notes. I covered it the weekend before, saying, yeah, maybe yields are bottoming and bonds are going to sell off, which means yields go higher. And, well, that worked for a while. And basically now we've closed that gap and we're now trading lower. And the main thing I want to emphasize is throughout this big trading range, you've had the point of control form at the higher end of the range, and we traded below that, we gapped below that, we're testing it, and if this is your chance, and let me rephrase that, if this is any opportunity to sell treasuries, I think the last couple of days were your opportunity. And the reason why is because although we're in an uptrend on treasuries still, and there's no reason to basically give up on the Treasury story. If you're a believer, via volume profile, you shouldn't be a believer right now. Rather, you should be taking the other side of the trade, because the risk reward of shorting Treasuries is definitely in your favor. And so basically, we're selling off from November's point of control. We're selling off from the composite point of control. And what we want to see now is follow through, and really a test of December's point of control and a continuation lower, testing basically the December lows. So as far as a trading idea, we look over to TBT, and this is a name that I've covered every once in a while for the last couple of weeks, and you can see what's going on here. In November, we had our balance range and then a sell-off, and basically in December we've recovered, we've held the value area low for the TBT, and now we're today up 4%. We're really starting to catch a bid in this, and we're above the November point of control, we're above the composite point of control. Let me zoom out. For the last several months, this entire downtrend, this thing has legs on it, and it's up 4% today, so I'm not saying Monday morning pile in, but I also don't think having a stop below yesterday's intraday low is a bad idea. And if you buy 1/4 of a position, and on any constructive weakness and a bounce, you scale in some more, I think you have some upside targets of 21.25 and 22.75, let's call it, for the TBT, which are decent upside moves. And I think this also helps the case for a rally in equities. Another name I want to look at, which I covered either last night or the night before, Halliburton, and this is a name that it's been beaten, and it participated in the October rally. It went from $28 to $40, but recently, it's gotten hammered, and it's really not been as constructive as the overall market. And where I'm getting at is, I think now's your cheap shot to get involved with Halliburton and have some real upside potential. What's a little disturbing is the point of control for the composite is at higher levels. The whole moving averages are pointing down, but rising tides lifts all boats, and we see this December point of control at the bottom of the range giving us a good, it's like a springboard, or a nice base for a springboard higher. And one other thing, you see this huge high volume, and how we've really held these levels, and if we've made a decent reversal, this trade if the market goes higher, this will work out. And this point of control, if we stay around these current levels, it will shift to lower levels, which should help the case for going long. But all in all, your stop goes below yesterday's intraday low, and your first target's the 35.50 level or so on the upside, which gives you about $1.50 or so, and then really you're looking for $37 on the upside to up to 39 or so. So there's some great possibility and potential in Halliburton, and we're at a low risk opportunity now. Just don't pile in, scale in, just like the TBD trade. Okay, Freeport. This name definitely outperformed the market today to the upside, and what we're seeing with Freeport is support at the 38.50 level, and we closed lower than that yesterday, but we definitely recovered that this morning. We continued higher. Make no doubt about it, we are within a balance range from, call it 41 down to 38.50, but you can see these whole the green whole moving average is pointing up. Black is trending sideways. It's holding, the recent price level, and the red and the orange are indicating that we're within balance. So, it's telling us exactly what we're looking at. We're within balance. We're looking for a move higher, and as long as we can hold these levels, we should push higher. If we can't, and we start to roll over from this December point of control, which is always a possibility, then your downside target is around 36. So keep an eye on it. Stay involved. We're still involved from these lower levels, so we have some cushion, but we're not piling in expecting, move higher. The market has not shown us that it's an all clear for a move up to 1300, 1330. Going back to Monsanto, this performed relatively nice today, and we're still bouncing off this point of control, this huge volume area relative to the rest of the range. The only concerning thing is we're still making lower highs with, flat bottom. So what we would like to see is this thing push north of 72. It will break this downtrend line, and it will give us, hopefully a positive move up towards 74 again, where we could really catch some momentum for a potential upside move. And, like I said with the rest of the names, if we are to go higher in the market, we're looking at names right here, right now, that are at the best support levels, that have the best potential for a move higher. So I think you keep Monsanto on your list. I think you stay involved. If you got stopped out today through this in the morning, or you outright sold, that's part of trading. But another part of trading is getting back in, realizing it was wrong to sell, and staying involved. So Monsanto still looks like a decent hold. Another name that we've been covering for a while, Walgreens. This name, it's held up relatively well. You can see I've bracketed the range that we've been in, and we closed positive today. We're holding December's point of control. We're holding this, you see this high volume area, and this looks like we are prepared for a move up to 35.50 or so. Your target is the point of control for September, and from there this thing could really get moving and go up to $37 or so, which for Walgreens it's not fast high flyer, but it can perform with the market. Silver, I think you keep your eye on it. It's still within this this big triangle pattern. If it can push above 32, or let's call it 32. That's really your all clear for silver. Your first target is 33, around just north of 33, which isn't a huge target, but from there it's 34. And if this thing really gets going, for example, if QE3 gets announced, hint hint, 38 to 40 on the upside could be a good one for silver. So keep an eye on it. It's holding the composite point of control. This entire range. That's this volume profile on the right. We're holding the point of control for that level. December's point of control is at the top of the range, so that's not positive. But like I said, if we clear 32, it should be an all clear. And going to silver's, I guess you could say expensive brother, because I think they call silver gold's expensive sister. I don't know, whatever, right? Gold underperformed the market today. Gold, it's looking relatively weak. It's looking like it could break lower, though I don't think it's I don't think you should just go in Monday morning and sell gold. I think you should wait. You can see this big volume from December, and if that forms, if we stay down here for a few more days and the point of control forms at the bottom of this range, then we have the November point of control and December point of control on the same level, and if we start to poke our head above there, we're going straight back to 173 on the upside on gold, and that's a decent trading opportunity, especially if you're a gold trader. So keep an eye on it. Don't take it off your radar, and just like the rest of the market, there's opportunity for more upside. Let me just show the euro because it matters. And the euro actually doesn't look too bad right now. And what I'm going to say is it within a downtrend? Definitely. Look what's going on. Downtrend. Obvious. Lower highs, lower lows. But what do we have going on, particularly in the month of December? You can draw a downward channel. It doesn't have to be perfect. Let me zoom out so these dotted lines indicating the days aren't so much of a factor. You can see if this thing starts poking its head above December's point of control, we're probably going to move back up to this November point of control, the top of the range. And if so, the market, the S&P has been outperforming the euro to the upside. It's been underperforming the euro to the downside. So really, the euro's been the more volatile issue. And the S&P, it really hasn't. It has followed the euro in a sense, but the euro for the last week or so has been making lower lows and lower highs. The market, the S&P, just did that for the first time yesterday on Thursday, and it's just one thing to look out for. A buy on the euro would be any move north of, call it 133.95, and if we get that, then our target would be 134. Call it 134.95. And just to cover it, the dollar. This looks a little more like a topping pattern. It looks like we're going to test the bottom, this high volume area from November where we've been bouncing in December. December's point of control is at the top of the range. Whole moving averages. We now have the biggest whole moving average over price, which indicates a bigger balance range, and I hope that makes sense. We see this range, really. I mean, if you exclude this, basically this was the October highs for the market. You can tell the extreme lows for the dollar. We're looking to test 77.5, 77 even on the dollar if we pierce through this, this 78.05 level on the downside, these recent lows. So overall, there are opportunities in the market, and I think it's important to keep your eye on them. Stay aware, be a risk manager, stay involved, but don't pile into any given name on any given time too fast. Just let volume profile tell you how to manage your risk, and you'll do fine. You'll make a ton of money. I hope you have a great weekend, and I'll see you on Monday.